So 4 years ago, I remember sitting in my basement and thinking to myself, can I actually just buy a stock, or is this something that's only for fancy people? I'd always heard that you can make money, but I didn't know how it works or even what a stock was. So I started to do some pretty intense Googling, and I ran into a lot of very confusing technical information. I had no idea how to tell what was accurate, and I kept getting blasted with ads for guru courses and other paid advertisements. I found it really frustrating and confusing because I didn't have a formal education in finance. So fast forward to today, I've done a lot of research and testing, and I've also had a lot of success investing in individual stocks through a lot of trial and error. But I find a lot of times when I'm talking to my friends, they don't really know very much about how to buy stocks. They don't really seem to understand the basics of how the stock market really works. And I feel like TV and internet makes stocks seem way more complex than they really are. So I decided I want to make some videos for people who were in my position a few years ago with no formal education in finance, how they can go about learning how to buy individual stocks. I promise it is not as complicated as people tell you. So in this video, we're going to take a look at why I recommend individual stocks and how do you get started investing in individual stocks. But before we do that, take a minute, scroll down, hit the like button if this is the type of content you're interested in learning about, so I know to keep making videos like this. So the first question is, why do I recommend buying individual stocks? Well, I think that you can actually make a lot more money investing in individual stocks. When I was about 20 years old, I had a Mint.com account, and that account recommended to me to invest some of my extra cash in a mutual fund. It said it was hands off, I didn't have to do very much, and it would just make me money without really much effort on my part. I thought that sounded great. All I have to do is just put my money into a mutual fund, and there you go. It'll make money for me, I don't have to do anything. So I ended up having that account for about 5 years, and over that 5 years, I made 22%. Now, you might be thinking, 22%? That sounds great. You put in $1, you get $1.22 out. Well, the problem is over that same time period, the S&P 500 went up 70%. So that means I could have taken all of that cash and put it into index funds, and I would have made 50% more money. So I started investing into individual stocks. I started a Robinhood account with $100, and once I became confident in what I was doing, I took all of that money out of my mutual fund and I moved it into my Robinhood account. Since then, the S&P 500 has gone up 28%, and I have gone up 46% with my individual stocks. So I beat the stock market by 18% over that same time period. So I've done much better investing in individual stocks than leaving that money in my mutual fund. And I've also done better than if I had just invested in an index fund and did nothing else. So how do you get started in investing in stocks? This is very basic. This goes for people who are going to put money into an index fund or people who are going to put money into the stock market. But first, you obviously need to have some money either set aside or start setting aside money. Surprisingly, you actually don't need a lot to get started. I don't think Robinhood has a minimum. I know I started my account with only $100. And I remember with my mutual fund, I was only putting in like $50 a month because I was a broke college student making minimum wage at the time. But as long as you continue to put money in, it will grow. And because of the powers of compound interest, the longer you keep that money in, the more money you actually end up making. So the next thing you need to do is figure out, what are your goals with this account? Is this a retirement account? Are you just trying to put some extra cash to work? And then you need to figure out, what are your risk factors? If you're planning to retire tomorrow, you're probably not going to want to take on the same level of risk as somebody who just graduated from college and is still living in mom's basement. Now, the next thing you need to do is set up a brokerage account. Brokerage sounds like a really confusing, very difficult thing to do. It's really not. It can literally be as simple as a phone app. But basically, a brokerage is what you order stocks through. There's big names out there like Charles Schwab, Fidelity, TD Ameritrade, and there are also really simple ones out there like phone apps, for example, Robinhood and Webull. By the way, if you're interested in starting a Robinhood account, scroll down in the description and use my referral link. If you use it, we both actually get a free stock. So once you have an account set up, you need to decide what to buy. I plan to make an entire video explaining the basics of how to analyze a company, but basically you want to make sure you're doing a few things. Number one, make sure you're buying the business, not the stock. Just because the price has gone up or gone down by a whole lot, that doesn't mean anything for determining what the company is actually worth. You really need to focus on the business that that stock represents. Number two, it must be a company that you understand the business model of. It doesn't have to be a company that you understand every single detail of, but you have to at least understand, how do they make money. Do not go out and buy stock in companies you've never heard of before. If you spend a little bit of time on the Robinhood Reddit forum or any other internet stock forum, You'll find tons of posts where people have done their due diligence and they've explained that this is the exact reason why if you buy the stock today, it's going to go up by 50% tomorrow. This is also something that I even tried for a little bit, and I promise you this does not work out and is not a good way to make money. Number 3, the company must have a good future. There are plenty of companies that you can go out and buy shares of that are very cheap relative to the amount of income that they make, but usually those companies have a ton of debt or other business problems that make the long-term future of their company very questionable. And if a company goes bankrupt, you're most likely going to lose a lot of money. Number 4, you have to determine that the company's price is less than what you think it is worth. This will probably be a whole video on its own, but you have to make sure that the company's current price is less than what you think it actually should be right now. It can be very tempting to pay a little bit more than you think you should when you've seen the company's stock price go up and you don't want to miss out. But remember to be patient and wait for opportunities. Okay, so these are the basics for getting started in stock investing. Comment below anything that you found particularly useful, and if you have any ideas for videos that you would like to see in the future. If you like this kind of content and you're interested in learning how to invest in stocks, make sure you hit the subscribe button and the bell notification so you get a notification every time I upload a new video. And again, the Robinhood link is in the description if you want to get a Robinhood account and get started. Thanks for watching.